Good evening. We're here tonight to talk about enhancing business skills and wrapping up a series of how to start a business or a side hustle. And our director who's sponsoring the series this semester is Bart Rice, and he's with us tonight. Bart, say a few words for us.
Sure. I'm glad everybody was able to make it in tonight. And this will be our last online session for this series. Next week, I hope to see everybody in person and get to meet you at the Sampson Park in Clinton, North Carolina. If you can't make it, I know we have some people from out of state and kind of far away. That's all right. But I just really appreciative of you tuning in and learning all you can from Steve. He's a great resource.
Well, you're too kind, and I'm glad to work with you and for you and for all of our classmates. We have I will say that after 19 years, I've had a lot of dynamic groups, a lot of dynamic classes. But these classes that we're having on Thursday night and on Monday night, and most of the folks are doing both of them, are really pouring into their business and very, very interjected about getting started and sharing with us. So it's been just really rewarding to have the opportunity to work with these fine folks, and so we all need to give them a great big congratulations, great big hand. So proud of all of them.
Yeah. I've been seeing all the homework and the ideas and the Facebook posts and everything come through. It's really, really good.
Yeah. All right. Well, here we go. Let's get started with a happy face and a thumbs up. And I'm Steve Carver in Dunn, North Carolina. Presentation number 1259. And we are all about wrapping up a semester tonight with our regular webinar classes, and next week we'll have a face-to-face opportunity to meet and greet in a roundtable forum with some refreshments and certificate presentations for those of you that can be with us. All of our sessions are always about for you, and we want our presentations to be serving your needs. My email addresses are on the screen. Please send me emails. Let me know how we can improve what we're doing. Constructive criticism is welcome. That's how we learn. That's how we gain wisdom. And I certainly can take the heat. I've been in the kitchen a long time. So tell me what we're doing right and what we're doing wrong. And Bart and I both will do all we can to make these sessions a good investment of your time. No doubt. That's our primary objective. I'm not a lawyer or a CPA. I'm a fellow that's been in business for 66 years and counting, and I look forward to working with you any way I can. My main job is to give free advice to you and share experiences to help you dodge bad situations, circumstances, unexpected expenses, and such as that. And first advice is always to get a second and even a third opinion before you make a big major decision affecting your business or your life. And a good place to do that, a great place to do that, are your small business centers throughout North Carolina, the community colleges. Our center in Clinton, North Carolina, where Bart is the director, is open and available to you. Every citizen, every person starting and expanding a business is welcome to be in touch with us and see how we can help you move your business forward. So give Bart a call, set up an appointment. We'll do all we can to help you. This lesson, our last one in this series, has 12 study guides that have been emailed to you. If you had registered with Bart, if you did not get that email, I'll send them to you tomorrow along with a video recording of our session tonight. In the study guides are some quizzes. Would request that you complete the quiz and send it back to me. You can refer back to the quiz with answers I sent to you earlier if you want to. The answers are all there, but I'm going to ask that you look at them, copy and paste them over on the new form, and send it back to me. All these study guides are good and important. I suggest that you save them after you look at them, be familiar with them, and you'll be able to turn back to them when you need them, and hopefully they'll save you some time and energy and make you some money as you go forward. What's next? Well, Monday night, this coming Monday night, we'll be almost wrapping up our long haul series, and we'll be talking about the generations thing, how we need to be aware of the different generations of customers, how they think, what moves them, how we need to plan to serve them with our marketing. We also need to think about where we are in our generation and how we might consider our legacy as we go forward, the employees that we hire. A lot of considerations come into generations, and I've just been amazed with how important it has been in my particular personal life, going through a transition in my business, how the generation issues are major. Then next Thursday night, a week from tonight, so a really big night, we're looking forward to it, with a live roundtable presentation in downtown Clinton, North Carolina. I think I've already sent to each of you guys an invitation to come and to ask you to send me back an RSVP to let me know if you're coming. And you're welcome to bring a guest if you'd like. We'll have some refreshments there, which Sarita has volunteered to help get that set up. So we feel good about looking forward to that. We'll start about 5:30. Welcome people to come on in, talk, sit around, meet each other, do a little networking. Then by 6 o'clock, we'll officially kind of get kicked off and go through a short program, the round table. Everybody have a chance to say hello or make some comments, and do some certificate presentations, take some photographs. We'll hear from Bart and anyone else that he wants to invite from the college, and to say hello, and then we'll head on home. So looking forward to seeing all of y'all that come. Then on May 26th, we start a new series. It'll be 3 classes. It'll be considered an advanced series, talking about cash flow and cash management and securing the growth of your company. So the program goes on. It's a year-round thing. So we'll look forward to seeing you again. I have been keeping up with attendance. Many of you, as shown on the screen, have perfect attendance so far, and your attendance tonight seals that down. You're definitely qualifying for certificates. Sarita and I have already started the process of getting them made, and look forward to working with and for all of you and making those presentations. A very special thanks to you, Sarita. We appreciate your hard work in doing this, and when you receive a certificate from her, you'll see how pretty it is. She puts a lot of work into them, does a really great job. So here's Sarita. Thank you very much. And Sonia over in Charlotte, our favorite roofing contractor, is usually with us, and if not, she'll tune in a little while, no doubt. Sonia Roberts, Kia Morrow in Kenansville and Warsaw, and working in Clinton, doing a good job with everything that she does cleaning wise. Jessica Melvin's been with us a time or two, and look forward to meeting her. She says she's coming over Thursday night. Amber Sampson in Clinton as well, starting her new company, Delightfully Dreadful Depot. Looking forward to hopefully meeting Amber soon and learning more about what she's up to. Sherry McQuarrie is the aspiring author in Charlotte, North Carolina, introducing her new book in the late fall, she says. David Mays is with us. Hey, David, good to have you back with us. And he's actually moving forward with his startup business with roadside rescue for people having automobile troubles and other types of maintenance issues as well. Edna, good to have you back with us tonight over in Tarboro. We appreciate your work and your Master 5 Associate Member qualifications. Hey, Christina, looking forward to seeing you Thursday night. We appreciate your note, and hope that your pet sitting, house sitting, and plant sitting business is moving forward, and we'll do all we can to help you as well. And there's Veronica in Hope Mills. Hey, Veronica, we see you too, and thank you for your work. I didn't know until today when you responded to my address that you were an RN. How long have you been nursing?
I've actually been over 27 years.
Really? Well, I'm just learning that, so thank you for your service, no doubt. Where did you train for your nursing?
I went to school at A&T in Greensboro. I graduated at Winston-Salem State in Winston-Salem. And I was a nurse for 13 years doing cardiac surgery. And before I retired a little bit from the hospital, I was the manager for open heart surgery at Carver in Fayetteville.
How about that? Well, I'm just so proud of you, and you should be proud of yourself. That's fantastic.
Thank you.
So we got you on board tonight as a nurse, and then we see Hope is on board with us over in the mountains. So we got 2 nurses on board. So anybody needs any medical advice, just go ahead over and chat and ask them the hard questions. It'll be fine. Hope, let me say hello to you. You got your microphone handy?
I do.
How are you doing?
I'm doing good here. I'll hop on video for a second. I'm trying to charge my laptop while I'll be part of this class.
We all have
I
to.
got your email really late, so I was like, I didn't even have a chance to get back to you. I just figured I'd jump on.
There you go. Well, did you hear me talking to Veronica?
I did. I was like, oh, another nurse, a cardiac nurse.
Isn't that fantastic? It's amazing what we can learn in these sessions. Well, thank you so much, Hope, and I'm glad that you're back with us. We've missed you, no doubt.
Thank you.
Did y'all get snow in the mountains today?
I was actually in Charlotte. I just literally got home from Charlotte like 20 minutes ago. So.
Okay, fantastic. What's your driving time from Charlotte to Murphy?
Oh, it's like 4 hours.
Wow.
Yeah.
So we're, I guess, good gracious, I guess to drive all the way across the state from Murphy to Manio is a big trip, isn't it? Do you know how many
hours?
Yeah,
like 8 hours, I think.
Wow. Okay. Thank you. Hey, Chessa, I hope that you can visit with us tonight. Thank you for your service in the Army and for all that you're doing, and we want to help you get that halfway house built in Fayetteville. And there's Shannon. Shannon's been with us every night, perfect attendance. Thank you so much, Shannon. We appreciate you and really hoping forward to seeing your business get up and running when you're ready to take it forward. Jennifer, you've been an amazing semester with us. Thank you so much for all that you've shared and done and showed us different ways of making things work just right. We're certainly proud of you. And there's Mary. How are you doing tonight, Mary? Can you say hello?
Good evening.
All right. Are you having a good week?
Yes, sir. Excited for this book release.
And we're excited for you. We've been talking about it on Facebook a little bit with our friends and hope that it's doing you some good.
Thank you. I appreciate it.
I want us all, we'll take a minute here that I hadn't had this to happen before in 19 years, and sometimes I run two courses a week. Sometimes I've done as many as 4 per week, but I've never had a group of people, as I mentioned earlier, that's worked any harder. And this week I'm doing something that we had never done before. I sent the information to Sarita earlier. I'm going ahead and announce it, 3 first-in-class awards this year. With the two courses going on, I am so happy to congratulate Veronica and Jennifer and Mary as first-in-class award winners for this semester for us. So let's everybody give them a big hand. Mary, Jennifer, and Veronica. They all have done 100% of the homework and then did twice as much more work to help promote their business in the sense of the academy, which I mean is going to the highest standards, setting the highest values possible, and doing things the right way. I've always just picked one, but this time you all 3 just blew us away and shared with everyone, and that is not saying that many more of you that's here with us tonight deserve lots of credit and lots of awards, and thank you too, Justin, highlighting your work and all. But you 3 ladies have just set the bar so high for the rest of the world. I'm proud of you, and we're all thankful to show us the way, because we're all going to be copying your good deeds to help everybody. So thank you all. Let's all give them a big hand. These 3 have just done an amazing job, and Sarita's already printing up your certificate, so we look forward to sharing that with you. And here's that new book, and it's Marriage and Anointing collide. How about that? What a title. And looking forward to getting into that. And thank you for sharing that with us, Mary. Justin, thank you so much. We appreciate what you're doing and the work that you've been working with. Please share your information with us. We want to share it, to make it work, to go forward. David, I'm looking really forward to seeing those YouTube videos when you get them posted. And as we talked about earlier, getting you a YouTube channel. And Justin, that's going to help you as well. Get those YouTubes or those videos that you got posting, convert to YouTube and get you a channel, and you will double and triple, maybe even quadruple your exposure if you have a YouTube channel by doing that. The last mention of the Godfather this year that I will do, this has been a special session. I appreciate y'all listening to me talking about it's personal. It isn't personal, it's just business, and maybe not, so we go from there. But sometimes as we get into business, my experience says that folks might get a little bit ahead of themselves, out over their wings, so to speak, to let the excuse "this is business" get in the way of being the best person you can be when making decisions. And if your ego gets out of hand, sometimes we use the "it's just business, it's not personal" to distance ourselves from the emotional consequences of decisions we make on other people and on ourselves. Apathy sets in, and that's basically saying that we're disregarding the human side of the decisions that we make, and we definitely don't want to get to that point. We want to keep apathy into our lives. So how do we do that? We have to remind ourselves to do a lot of good listening as people are talking to us. We've got to remind ourselves to keep our humility and to welcome criticism and to do that in such a way as to say that it's a gift when people are offering you good criticism in a good way, and it's the way that we grow, no doubt. To find the balance is the key, to have our goals, and we use passion to drive our growth, but we don't want to become detached to the point that we lose our humanity. We want to stay involved as a human being in our business, and remember that it's so important that the hardest part of being a leader isn't making the right decisions. You know, that comes down to the A's, B's, and C's, making the right decisions. But what is hard about making the right decisions sometimes is that we have to remember that these decisions may be painful to other people. And as we make those decisions, indeed, to weigh in and try to make it as less painful as we can, and to remember that there's consequences for the decisions that we make, and be prepared to live with it. Be prepared to live with it. That's what it takes. Wrapping up the 40 drill skills tonight, no doubt about it. And Veronica, I want to say again, thank you for redoing those 40 drill skills and giving us a document to back it up, and giving me permission to share that with everyone. So when you get your email tomorrow from me with your study guides, it will be the original 40 drill skills that you've seen every week. But there's a new one there, and that's what Veronica did with it. She rewrote them and gave great applications how it can apply. And hers is 10 times more worth reading than mine was. So if you don't just pick one thing to read in these study guides, read Veronica's 40 drill skills. It'll be worth your effort. Veronica, let me just ask you if you'd have a comment about what you were thinking as you completed that process of rewriting the skills and the applications. What did you come away from that with?
It really gave me a better insight into where I stood in my business, what I wanted to present to the community, how I wanted to help the family that my business is serving. And so I kind of equated it to my business plan, because my business plan did the very same thing in the beginning stages of starting my business. And so now that started working out and we're getting into different things and working out the issues that arise. When I did the 40 Yes, it feels. It really was an eye opener for me. I absolutely loved the exercise, and it really, really helped me. I was like, wow, I didn't even know that I had those thoughts or feelings about where I wanted to go in my business. It really, really helped.
You know, when I did them originally and went back and did the videos, to go back on it, it kind of hit me of how it all ties together in creating that circle of decisions and connecting all the dots. And I think the 40 drill skills helps connect the dots better than any other exercise that I've seen. So I encourage everyone to take that exercise to strengthen your tool belt of skills and confidence. So good luck with that. Thank you, Veronica, so much, no doubt. Number 33, and we'll talk about this in deep while I get in a little bit. Instead of just saying hello and giving a wave or a casual good to see you again, leap, jump up, show strength, show excitement about welcoming and acknowledging a customer and friend. When you have a chance to show off how proud you are to know someone and how happy you are to revitalize your experience, it goes a long, long way. And if you do it, you will see exactly what I mean, and it is so exciting. So we'll talk about that a little later. Number 34, keep your radar turned on now. We got to stay aware about what the next selling opportunity that we have is around the corner. What's the next hot thing? Now, I'm not one to tell you I want you to jump on every fad that rolls across the internet, but I am one to say keep your thinking cap on and look for the new opportunities. Diversification is a key to being able to stay in business, and you always want to look forward to where you can find that next profit center that you can add to your business. So keep that in mind. Keep your radar turned on. We got to remember. Let me sit down mute. We've got to remember that when we're forecasting, it's a structured thing. It's just not, a thought passes here and a thought passes there. But forecasting will help you dodge Murphy's curveballs, pitfalls, unpleasant surprises, and unexpected expenses. Now, here's the difference. Here's one type of forecasting. That's when we're laying in bed at night and we have a thought that comes through. Man, this is cool. I'm going to put that in action tomorrow. And then we go to sleep. Or we have a dream and we wake up and we were dreaming about something business, something that pretty good idea. We have a dream. Man, I need to write that down so I can put it in place. Then we go back to sleep. That's great, but that's not doing any good because me and you both know that we forget that stuff the next morning. But we're drinking our coffee. What was that idea I had last night? And I just cannot remember it. So here's what I'm saying. When you have a good idea come across, keep your pad and your pencil close by your bed, on the table in the den, maybe by the coffee pot. Get as many pads and pens as you need to scatter all around. So when you have one of those good ideas, you can write it down, make a note of it till you get back to your business plan or your marketing plan and put it in the plan. This has helped me tremendously along the way. We talk in these classes, of course, every week, lots of times, and somebody will mention something, and I've got my paper and pen here, and I want to tell you, I'm writing down your good ideas, and I will put them in my business and put them in these classes. Why, indeed, do we need to reinvent the wheel when we have such great classmates giving us good ideas as we go? So put it in a structured plan. Write it down. It's just as simple a thing as it can be, but it's huge when you're doing this. 36. If you want to win negotiations and go into business meetings and come out successful, if you want to close deals, if you want to have more profitable deals, prepare yourself. Don't sit around playing on Facebook or looking at some foolish game or shopping on Amazon when you should be preparing for your next business situation, making notes and thinking about what's coming next. During this time that we've been doing those things that aren't really making us any money or helping our business, now we've got AI to talk to and ask them for ideas that might help you along the way as well. So prepare yourself as you're going into important meetings. Showing people that you care is important. Listening. Because people, we've heard this many, many years, people don't really care about how much you know until they know how much you care. And that's a big, big deal. Veronica, congratulations for using that theme and all throughout your business and in a home care business. It's perfect, just perfect to do that. 38. We often wonder why employees just don't seem to care about the business or really care about their job or care about my dreams. Well, let me tell you this. 66 years later, I can tell you that you cannot expect or even think that some employee will really care about your dreams and issues if you don't care about theirs. It's a two-way street. And if you're not showing they are part of your business family, your business way of thinking, that you really care about them, their family, their future, then I'm going to tell you they're looking for the next greener pasture that comes their way. Bottom line. So hire the best and let the rest go on. You search for the right employees, and then you do your best to train them, and then you make sure that you care about them, and then they'll care about you. And your employee turnover will cut down to almost nothing, almost nothing. Let me step away from the screen. I'll be right back for 1 minute. I'm holding up a book called The Dream Manager. The Dream Manager, written by Matthew Kelly. On Amazon, it sells for about $16 new, I think. Maybe you can get them used for $4 or $5. But The Dream Manager is a terrific book. You can read it. I'm a slow reader, and it's in good size print. You can read it in about an hour and a half easily. And then your second reading will probably take 2 or 3 hours. Because after your first reading, you don't realize there's so much meat and potatoes in this thing, you want to go back and do more. This one book has an excellent chance of changing your life. Not only your business life, but your personal life. And this is the only book that I talk about like this because I have personally seen dozens of people that have come back to me and said it made a major difference in their business and in their personal life. I even had one of the Small Business Center directors about 15 years ago. I gave this book to them, and they got back to me in about 3 months and said they had decided to move to California and get another job pursuing their dreams after reading this book. I mean, it's huge. And after they got to California, sent me several thank yous for introducing them. What does it tell you? It tells you as a small business owner, the little things that you can do to make employees want to be part of your organization. And when you can have employees that are not looking for work somewhere else and instead promoting your business, it goes a long, long way. What else it does, number 2, is helps us as individuals set personal goals and figure out ways to get there with the help of our friends. So it's pretty darn amazing. For a number of years, I gave a special webinar just on this called The Dream Manager. So it's not in your notes, but I'll make a note here to send you a link to it tomorrow. And I'll guarantee you, I want you to go ahead and order and buy this book. And if you disagree that it doesn't make a meaningful part to you, you let me know and I'll buy it back from you and I'll give it to someone else or you'll give it to someone else. The Dream Manager, Matthew Kelly. How about typing that over in the chat board if you don't mind, help you remember it. Dream Manager by Matthew Kelly. It's a huge, huge good thing. Number 39, integrity cannot be compromised or replaced. It can't, charisma cannot become a substitute for character. We've talked about this a little bit before in the course, but let's nail this down as we're closing out this series. Find integrity and hold on to it, own it. Yes, charisma is important for you. I want you to have that. But truthfulness is more important. And integrity involves truthfulness. So make sure you got that. Make sure you got the energy. We want integrity and we do want character. Number 40. People very seldom quit a good job, but people will very often quit a boss. So as you're becoming a business owner and an employer or someone's boss, I want you to tend to understand that a boss doesn't necessarily mean that you're a leader. And the leaders for the owners of businesses in the Academy of Entrepreneurs and Associates, we are committed to mutual helpfulness and to leadership. A boss means that you're a taskmaster, that you give orders, that you crack a whip and you insist people do this and that, and you try to climb the ladder on other people's back. Okay, let me say that again. Are you trying to climb the ladder on other people's back? If that's the case, please stop. Read The Dream Manager. Big deal. Justin, let me mention to you that the Dream Manager book is all about a person starting a janitorial or custodial business. So you'll be right in tune with what's going on here. So make sure you get a copy of this and spend time with it. Back to 33. Through these whole series of this Monday nights and Thursday night classes, I'll say a lot to you, but I don't think we're going to talk about any one thing that you will see make a world of difference like what we're talking about right now. And that is, I'm encouraging you to get in the habit of leaping when you have a chance to welcome, greet, and meet a potential customer, an old friend, or a business arrangement. Creating impressions is important, but Steve-O here is saying let's create indelible impressions. And what's a good way to make an indelible impression? And that is when you have someone come into you and you stand up and show great energy and joy in meeting and greeting them, you are making an indelible impression that they will never forget. Never. And that means, wow, have you done a little bit of raving fan customer seed planting when you do that? Oh, yes. Because you're going to be on their mind when anything related to your subject comes up. Indelible impressions is what we want to do. That means that we're going to rise to our feet. We're going to give them a genuine smile and a firm handshake and pat them on the shoulder or what feels good there. A good, straightforward welcoming and gestures to leave what no one can mistake except as warmth and openness for an indelible, lasting impression. Let that sink in. I've had the opportunity to use this now for 6 months. And it started with me a little longer than 6 months ago when Norma and I were in a restaurant, a pretty crowded restaurant. And all the way over on the other side of the restaurant, I spotted a friend of mine, an attorney who had helped me a lot 30 years ago. And we've become good friends, but he moved his practice to Raleigh. And I don't think he saw me, but I knew that when I had a chance before I was going to leave that night that I was going to go over and at least extend a greeting to him because I hadn't seen him in a long time. So Norma and I finished our meals and we're getting ready to check out, and I headed weaving my way through the tables and got about halfway over to him, and his name is Ben. Ben saw me coming, just happened to glance up and saw me coming. And Ben immediately put his napkin down, his fork down, pushed his chair out, straightened up his coat, and stood up and turned to me, and I was still 20 feet away from him. He said, "Steve Carver, I am so glad to see you." It's loud, a little bit embarrassing loud, but man, it just made me swell up. It just made me feel so good that he did that. And he had a great big smile on his face as if it was giving him a lot more pleasure than me. Well, we closed the gap and hugged each other and patted on the shoulder and all that and stood there and talked for just a minute and just small talks like stuff. But the bond was reunited. And I knew right then that I had learned something I needed to pass on to my fellow classmates, and have done that time and time again. And then for a few weeks I got to thinking about it. That came so natural to Ben. I bet he does that all the time. I bet he does. And then I thought about a couple of more people that I've seen do that in the past, and I've seen them do it several times. And it dawned on me, those fellows know something I don't know. And they're exercising a wonderful skill that I need to pass on to new entrepreneurs that aren't in their 70s and 80s. Because if I had learned this long ago, it would have made a major difference for me, and it will for you. So even though you may seem like, well, this may embarrass them a little bit, or I don't feel comfortable standing up where other people hear me doing this, get past that, because it is a wonderful thing to do, to recognize someone in such a way that makes them feel important and valuable and a member of a special friendship when you do that. And now, for the last 6 months, I do it several times a week. And every time it works. It makes me feel really good, and I see it makes other people feel really good. And that's not a bad thing when you can do that. Make an indelible, lasting impression, and it will go a long, long time. So give that a try. And consider it a gift from old Steve-O here. Not charging you 1 penny for it, but it can be worth $1 million to you. How about that? Let me tell you, a handshake matters as well. Men, women, young, old, a handshake matters. Don't back off from it. I know we're in the world of COVID and personal this and germ warfare and all that stuff, but you figure out a way that you can feel comfortable with some type of handshake, and not the bad kind. If you're going to give the bad handshakes, don't do it at all. A weak handshake is bad, and a bone-crushing handshake is bad too. That's not what I'm advocating here. Not one of these Rambo type handshakes, which my dad used to say was so very important. And let them know you're there, give them the grip, make them squeeze it till they hurt type stuff. I mean, that's the way World War II veterans thought about things. And indeed, there's some value to being there firm enough to know you're there, but you don't need to break somebody's hand, especially if they're 80 years old with arthritis. You can do this a different way. And you ladies, don't hand me your darn fingernails. No one is interested in shaking fingernails with anybody. That's no good either. It's just as bad as a bone crusher. Keep your old weak-ass fingernails to yourself. Nobody's interested in squeezing fingernails. That's just all there is to it. And the old wet fish, the slimy wet fish that feels like a dish rag, no, handshake can be awful important if that's where you're coming from. No limp mess. You don't need to do that. They do matter. No wet noodles. You ever had somebody hand you the wet noodles? I mean, that's just awful. Now, I'll tell you what is okay, and after COVID, I understand a good fist bump is fine. And give it a little rub if you want to. Give it a little contact. Give me a little skin there. You can get a little skin with a fist bump, and that's all right, a little extra effort. But just a good, firm handshake is fine. And fellas, shaking hands with the ladies, shake the hand and just apply pressure by putting the second hand on top of it there, and hold it there for a second or two, but not 3. Don't overdo it. Don't push your luck, but let them know that you're there for real. Okay, it matters. It's good, and I don't think most ladies will be offended by someone offering the hand if they don't feel like you're going to hurt them in some way. Now, I'm a hugger. I love to hug. If y'all come down Thursday night and you tell me not to, I'm not going to hug you. But otherwise, you're probably going to get a hug from old Papa Steve-O because I just love hugs. My mom and daddy taught me it was an okay thing to do. But HR now, 2026, a lot of different opinions, and you don't want to cross the bridges. But HR now says that even putting your hand around the shoulder and patting the shoulder is probably all right. A face-on hug where you're squeezing and feeling and that kind of stuff, probably not a good thing in today's world. But a shoulder around and pat on the shoulder, probably okay. If you get a sense, then back away from it. But show some humanity here and warmth, and that's not a bad thing. In my opinion, okay? Now we've got some RNs and some doctors and some really experienced people here. This is the time that I want you to turn on your mic and say, yeah, let's don't do any hugging, Steve. A handshake's okay, but no hugging. Is anyone going to tell me that? You're welcome to turn your mic on right now and say, hugs, no more. It's too late. How about it, Janet, the people hugging Maryland?
We love up on you, sir.
Say that again.
We love up on you.
Okay, I hear you. And Dr. Mary, what do you think about this subject?
So that's right there.
Say that again. Dr. Mary, what do you think about hugging?
I'm right there. We call that the church hug.
Well, a church hug. Okay, I like that. That's a good term to use. Thank you so much. I can get a lot of opinions out of you guys if you'll share them, and I appreciate that. So let's get started. Endurance is what it's all about. Stay in the game. Today we're talking record keeping and lots of other stuff. Number one, we got a lot of records to keep, and there's no doubt that computers were just going to do away with paperwork. Man, I remember when that was coming on. About the same time fax machines were coming out, the next thing was computers are just going to get rid of paperwork. Well, that didn't quite happen, did it? If anything, computers have tripled or quadrupled the amount of paperwork that we have to do now because the printers just spit it out and I spit it out. So we have to keep up with stuff. But we have paperwork, paper files that are made for filing cabinets, like this office is full of them. And then we have computer records. And if you're going to be in business and you're going to have to be accountable for your taxes and you're going to run your business plan and look after your invoices and serve your customers right, record keeping is a deal. It is a big deal. And Veronica, in your history in nursing and now headed into home care, wow, I can imagine the number of filing cabinets that you'll be having. But here's the thing. Keep up with your records. And then the simplest way in the basics is learn how to save your work as you're working on a computer. This old gray-headed fella has become so mad at myself and my computer through the years that I have really been tempted to take a hammer to him because I'd have a glitch, a power outage, or I'd hit the wrong key and there goes 3 hours of work that I didn't save. Oh man, that's so disappointing. It always happens at the worst time. So get in the habit of saving your work as you're working. It's just a habit to do. And once you get into the habit, you can do it. Every time you get to a certain point, you'll create your own keys or your own ways that you hit the save button to make these things work. And there's some software that save it for you, but I couldn't ever make that work for me. I had to hit that save button myself. And let's see, in the last week, I've had 3 occasions I lost my work because sometimes I forget to save my work. So, but none of them had lasted too long because I'm saving about every 15 minutes now. So that makes it easier. So get your flash drives, your thumb drives, put them in and use them. When you finish your day's work, just make it a habit. When you finish your day's work, go back into things that are important, save it over on your flash drive. And so that you can carry it with you, or if your computer dies, that flash drive isn't going to be destroyed. So save your work and save your flash drives and put them up. Now, a lot of professionals, there are a lot of ways to save on the cloud. I personally hadn't found the door to the cloud. I think I'm using it, but it's kind of a generations thing in the cloud. They're kind of in different hemispheres for me. I know it's out there, and I hear people talking about it. And my cell phone is always asking me to put this in the cloud, and I'm saying, how in the world can I do that? So a lot of you smart people I know are doing that all the time. So you also have some companies that will back down your stuff every day for you. And they say they'll have it ready for you the next day when you come to work, even if you have lost your computer. And maybe they do, but my personal experience on those promises is sometimes they are just shysters. They do not deliver. They talk big talk, but when the chips are down, your mess is lost like it always has been after you pay the money. So check out their reputation before you pay somebody to look after your storage. Now, you're going to have, after just 2 years, you're going to start collecting boxes and boxes of paperwork. And we're going to talk about tonight that you don't have to keep some of this forever and some of it for at least 7 years. So there will be a space, maybe an outdoor storage or a building you build or a closet you set up for your storage for your business records. Got to be careful with that. Make sure that your offsite or that your paper storage is high and dry and probably not going to catch on fire. Water, storms, and fire destroy old records, and that's a bad thing when it happens. How do I know that? Well, Steve was going to build him at Carver Equipment Company. I built an outside huge shelter to put tractors under and a room above to keep storage records in. How about that? This is 40 years ago, and it was about $10,000 back then. I mean, it was a serious effort for storage and to do that. And it worked out so well because it was so high up. I didn't have to worry about floods or water, anything getting wet in there. It was 10 feet off the ground until a hurricane came through. And because it was 10 feet off the ground, it blew my records across Harnett and Lee County. I mean, I couldn't find anything. It destroyed my building. It was well built, but not well built enough. So I lost about 10 years worth of records blown in the wind and the rain. Who knows where? I mean, Timbuktu. They just left. So learned a lesson there. I then went to renting storage buildings built on concrete pads made out of metal that didn't have any fireplaces in them and high enough ground they couldn't flood. And that's what I did for the rest of my business life until I closed my bricks and mortars. And now everything is here in my office where I'm sitting. Of course, it's not a fraction of what it used to be. So as you're selecting a storage site, remember, flooding, fires, mess you up. You really don't have to worry a lot about security. You got a good padlock on your building. You put up in there old, obsolete business records. Not many thieves are going to risk getting in trouble to look at old paperwork. So that's not that big an issue, or it hadn't been with me. So you got to keep some things permanently. Just know that you can't throw some things away. Your articles of incorporation, your copyright laws, audits, things like that, copyrights that you might have, stock certificates, deeds and mortgages. You want to keep those things forever and ever, no doubt, and you need a good place to do it. Where is the very best place to keep old paperwork in storage? Is a safety deposit box at the bank. A safety deposit box, a good sized one in most banks, costs about $70 a year. Maybe a little more, maybe a little less, but I mean, this is a box that's a foot deep and a foot wide, so you can put a lot of stuff in it. So I'll keep that in mind. Things that you also have to keep are your depreciation records, year-end financials, license and permits, tax returns, tax documents. You should keep those, trademark registrations. Now, when I say permanently here, that means a long time, right? It does. But I'll have to confess, this week, while I'm doing some estate management work, I looked at some records, and I looked at some stuff that went all the way back to 1959. That's a long time. And you're talking about a lot of boxes and a lot of permanent records. I mean, it just kept on and on and on. And I ended up throwing away about 800 pounds worth of paperwork. knowing I was going to teach this class tonight, I kind of felt kind of guilty, but I really didn't think I needed to keep stuff 60 years, you know. So I'll cross that bridge if somebody wants to ask me for it. I got a feeling I can find it on computer records if I have to. And that's another side. If you've got a good history on digital files that you feel absolutely good about, and it's saved on the cloud, or it's saved somewhere that you know that you can retrieve it, then the paperwork you may feel comfortable throwing it away. But before I did that, here's two people I talked to: my bookkeeper and my accountant. Don't come back to old Steve-O and say, well, Steve, you said I could throw this away. Well, I don't say it, but I also said don't do it before you talk to your accountant. So I don't get me a bridge to protect me here, and do that. Bills of ladings, things that you need to keep for 7 years. No doubt about these things. You want to keep them for 7 years, and I actually say 8 years, because just like this week, I went to my 2025 box, which has already been sealed up and put in my storage closet, because I got a lot of stuff in the mail this week, or digging out some other records, and that should have been put in that box or in 2024 box. And I'm not going to go back and dig all those boxes out. I just stuck it in the 2025 box, and I got a feeling y'all do the same thing too. I didn't throw it away, but I put it in that box. So save your stuff 8 years, then you'll surely be safe. Those records you need to keep up with: expense reports, and employee records. If you have employees and with files, you want to keep those for at least 8 years. An employee that has a medical problem 6 years after they left working for you goes to the doctor, and the doctors, as you nurses know, ask you, now, is this accident or is this ailment work related? And if it is, they say, well, yeah, I think it is. Well, where were you working at that time? And they give you that information. Well, what that is doing right now is planting the seeds, and I'm talking about bamboo seeds that grow really fast. It's planting the seeds for a workman's comp claim. And workman's comp claims are paid by employers. And indeed, an employee that worked for you 8 years ago and left you may remember, and maybe they're being honest with themselves and thinking, you know, I think I was working for Sarita when I fell down and hurt my back. I don't say I was working for Sarita. Well, if a workman's comp claim is generated there, then guess who gets to pay for that medical bill? It's Sarita and her account on workman's comp. But maybe the accident didn't happen with Sarita, and she's got an employee file there that when that employee was terminated and left to go to another job on their own, or were terminated, they signed a form before they got their last check that said they're not injured, they didn't have any injuries. You have a basic information form there. So Sarita's got a little bit of information to protect her workman's comp account. So those files are important. Now this ties right into, because I'm not talking about HR relations now, I know some of you are pros in this, but when you have an employee and you want to keep good records on what happens to them while they're working with you, and indeed you have them sign documents that saying when they're hurt, and if they are hurt, that they were properly treated and by whom. In other words, you're protecting your butt from future claims. And these things can get quite complicated and very expensive from time to time, no doubt about it. Sales tax returns, payroll records, invoices, canceled checks, put them in the box, save them for 8 years. The law says 7 years. I'm suggesting 8 years. These records can become very important when the word FEMA comes into play. And Hope knows all about this over in the mountains, and anyone that's dealt with floods or flood areas or forest fires, wildfires, hurricanes, tornadoes. When FEMA comes, that means your area has been declared a disaster area. And FEMA comes in with federal funds, maybe cash, grants, maybe loans, maybe SBA long-term loans, maybe things to help you along. But FEMA is going to base how much they give your business on whether or not your business was profitable or not, because they are suggesting to you that they're going to give you some money to help see you through this tough time based on how much profit you made last year during this same period of time. So they're not going to give you money unless you can prove to them that you were making money. Makes sense, right? And as the taxpayer side of it, I think that's the way it should be. So here's the two-edged sword as we're talking about taxes tonight. If you're managing your books with tax avoidance in such a way to show as little profit as possible so that you pay as little tax as possible, when it's time for you to ask someone for help based on lost profits, if your records don't show you were making profit, you're not going to get any help. Okay? If your records show that you're not making any profits and you want to go to a lender, your chances of getting a loan very slim. All right. There's a few exceptions to that related to appreciation and depreciation. We'll talk about that a little later, but it's good not to have to pay any taxes. I know that, but there's times that your business needs to show that you're making a profit, and talking to FEMA is one of them. So let's talk about depreciation a little bit. And I sent to you earlier this week a study guide, a handout, talking about depreciation. Hopefully some of you have read that. You can go to universities around the world for years after years after years talking about depreciation and never get to the end of the line or know it all. But I want to tell you that Lisa Borga, I found in 2021, published an article on the internet that I thought was a great summary for me and for my classmates here in these classes about understanding depreciation to help kind of move forward with some type of knowledge. So I sent you a handout, a study guide, and she is really cool. Read through that to kind of have a handle on what depreciation is. We'll talk about the basics right now. What is it? Depreciation. You've heard it. You've heard the word a long time, but what is it? So let's talk about it in terms of small business people. The reduction of a value of an asset with the passage of time. That is, when something is being used and worn, as wear and tear involves, which reduces its value in normal terms. There may be something going on the outside that appreciates its value for some reason, being it rare, being it super expensive or hard to find. There could be some exceptions, but almost always wear and tear on an item depreciates its value. So when we buy something for our company, for our business, it becomes an asset, right? It's an asset. And assets show up on our financial statement just like money does, just like cash assets does, and just like people that accounts receivable, people that owe you money. So, but those items don't depreciate with wear and tear. So depreciation comes involved with those assets that are hard, fixed assets that come into play. Now, work with me here for a little example in saying that you've just started your company and you have $10,000 in the bank. Congratulations. I wish I had $10,000 in the bank tonight. It'd be real nice. So how many of you got 10 grand? All right, good for you. So I got to buy something though. My business isn't gonna work unless I buy a $5,000 commercial saw because I'm gonna be in the furniture business. So I'm gonna buy a $5,000 commercial saw. I'm gonna pay cash for it. I got the money to pay cash. Maybe I ought to finance it. But right now we won't get into that. So when I spend that $5,000, my company the day before I did it was worth 10 grand. Is it worth 5 grand now because that 10 grand's gone? Did it cut my value in half? No, because I've still got 5,000 cash, but now I've got a $5,000 saw, and the saw goes on my financial report as an asset worth 5 grand. So spending money on depreciable items doesn't necessarily lower your value of your company. which is an important thing to remember. Sometimes it's okay to buy something. Sometimes it is. Sometimes it's okay to finance something. We talked about that last week or 2 weeks ago, but now we're just talking about paying cash for it. So I got $5,000 in the bank, $5,000 in my saw. My company is still worth $10,000. However, the next day that saw starts becoming used and starts losing value. And I need to figure out a way to be truthful on my books about how much my assets are worth. And I need to find some help from the federal government, maybe offering me a little break with what we call depreciation, to let me take some tax breaks because I bought something new I bought an asset for my company. So the federal government, the Congress of the United States, really want small businesses to grow. They really want all businesses to grow, but small businesses especially, and to encourage us to buy items to help keep the economy going, to help other people find jobs. They give us a little incentive on our taxes to buy stuff. And that incentive is called depreciation, a scheduled depreciation that lets us take a tax break each year for items that we have purchased in the past. And the schedule, the quickness that we can depreciate may vary from year to year. In law year, the different laws change from time to time. You might have a schedule of depreciation that is you can write it all off this year, or you might have to wait 15 years to write something off, or everywhere in between. I'm going to use an example tonight, a 5-year write-off plan, which is an option that I've used for many, many years. So a 5-year depreciation plan is saying that each year I'm going to depreciate 1/5 of the value of the purchase price and call that asset worth less money. The government, as you can see on the chart, so the first year is at $5,000, and then it reduces $1,000 each year. And by the 6th year, it's on the books at zero. Now, here's a term to make a note on: book value. I said it's on the books at zero. Each asset has a book value, and each asset will have a fair market value that we talked about in week 3 and 4. The two values are going to be different, and it's really important that you remember that. Where does the tax advantage come in? Where does the tax avoidance come in? Because using depreciation is a tax avoidance tool. As we're depreciating the value of that asset $1,000 each year, the government is allowing us to use $1,000 worth of depreciation to reduce our taxable income by $1,000 each year on that one item. Now, I didn't say, and this is really important, I didn't say we're going to reduce our taxes $1,000 a year with that one item. I did say that we're going to reduce our tax exposure $1,000. So if we were going to pay taxes on $9,000 profit, we can subtract $1,000 because of that saw, and our tax exposure will be $9,000. So we'll pay less taxes. With me? Everybody's with me? Give me an or a yaha or an amen or a hallelujah or whatever, okay? So that's why it's good to keep up with your depreciation. It is a tax avoidance tool, a very important one. So you can imagine that a company that has lots of real estate, lots of equipment, lots of tractors and forklifts and farm equipment, and trucking companies with lots of trucks, man, those are big ticket items, and you can imagine how large that depreciation factor becomes. It becomes so important and so large with some companies for a lot of years, they end up reducing their tax exposure by the depreciation factor and don't have to pay any taxes. Sometimes reduce it down to nothing. That is tax avoidance at its best. provided it's kept good. So is that fair? Well, I don't see where fairness plays into this. This is just, this isn't personal, it's business, right? So here's the thing. They spent all that money to help the economy. And indeed, when they spent all that money, they paid tons of sales tax. See, this ain't got anything to do with all the sales taxes that you pay. And because it's on their books as a depreciating item, they're going to pay tons of county taxes too. It's just on the income tax that they get a good break. But on the news, we hear a lot about big corporations pay very little or no taxes. This is normally the reason why, because of all the items they purchase and they're taking depreciation on it that's reducing their taxable exposure. And if the big boys can do it, you and I can too. And I want to tell you, it's made a huge positive difference in my business for 60 years. And we were a heavy investment company into equipment, so you can see how it played heavy with us. Depending on what you're buying, we do as well. So what is it that you can depreciate? What are those things? Well, that's going to get us back to the definition of what's a business expense and what's a capital expense. And taking deductions, that's going to come into play. And we'll bring in another word now called write-offs. Write-offs are the same as saying deductions. And so we've got business expenses, which are write-offs, and then we've got capital expenses that are write-offs. Well, the capital expenses are those items that were depreciated. Capital expenses are tangible, things you can hold in your hand, you can touch, you can feel, you can see, you can put your finger on it. The tax auditor can come by and take a picture of it and put his finger on it, so it's something you can hold on to. Regular business expenses or write-offs are things that are used up. Justin, that would be your mops and your chemicals and paper towels and things that are used up. That's just a write-off expense. However, the van that you're using would be a capital expense because it's tangible and it's going to be around a while. Usually, capital expenses are items that are going to last at least 1 year, and they last a year. Things that lasted less than a year, you wouldn't do it. There are some exceptions to that. So think about that. What are the paperwork or accounting or bookkeeping issues related to these? Well, business expenses just go into your chart of accounts, depending on what it is, and are automatic write-offs. Your capital expenses, though, they're things that you're buying that you're going to capitalize or depreciate. And over in that chart of accounts, they might have a different account number, the 300s, 400s, or whatever else you call them, because you're going to keep up. You're going to keep up every year with that asset on what its current value is and where it is and what the book value is forever and ever until it schedules off. And even when it schedules off and has a zero value on the books, you will probably leave it in your accounting and bookkeeping record at a zero value, and I'll show you why a little later on. Now let's take a segue over to taxes a little bit now. When I ask CPAs and bookkeepers, what is the first advice I need to share with new entrepreneurs just getting their businesses started? What is the first piece of advice I need to share that they need to remember forever and ever and ever? Okay? What would you have them say to me? And you know what? Every CPA that I've ever mentioned this to, all of them have answered the same way, just as if it was question number 1 on the CPA test. So I got a feeling this is kind of important. And their advice has been, in some way, that an entrepreneur needs to pigeonhole tax money as they receive it, so that what they're not apt to do is to spend that money for other reasons before this goes to the government. The bottom line that we all need to hold on to is tax money is government money. It is not ours. We are given the opportunity to collect it for the government, but not for our own benefit. We're given the opportunity to collect it so that we can send it on to the government. And indeed, if we don't send it on to the government at the right date, then we're going to be in trouble. And they have no sense of humor whatsoever when it comes to this. It's, I'm going to come to your business, seize your business, put a padlock on your business, close you down, sell off your assets to make sure we recover the state's tax money. That sounds kind of hard, doesn't it? Well, that's just the way it is. But here's the rest of the story. Indeed, you don't have to sell something and get sales tax to generate government tax money. All you have to do is have an employee that you're supposed to be taking deductions on. Yeah, Social Security, unemployment, all those other things that you may be deducting, insurances. Yeah, that can add up to a lot of money. So here's the thought. If you're paying payrolls or you're selling items that you're collecting sales tax on, there is tax money that needs to be pigeonholed every week. Every time you write a payroll check, that means you need to set aside some money for government deductions that you should have been taking on the employee. And is it hard? Yeah. Is it time consuming? Yeah. Does it change a lot? Oh, yeah. Does it require discipline? Absolutely. But it's part of this entrepreneurship now. So know that it's happening. It's one reason that a lot of people are hiring astute bookkeepers out and not doing their own bookkeeping. It's a good reason that some people are hiring people to do their payroll for them because it's tedious now. But it's also the reason that I see more startup businesses have to fold up and go out of business for this reason more so than any other reason, is they spent the tax money or did not save those deductions so when it was time to send it in, they could do that. The employees get mad, they turn them in automatically, they don't give you 24 hours sometimes before they call that 800 number, and folks are going to come after you. So pigeonhole the tax money. You'll get used to it and it'll be all right. Let's get back to those business expenses so we don't lose that. Costs that are for renting, that's a write-off. That's a business expense. Travel expenses need to be kept up with. They're direct write-offs. Payrolls is direct write-off. They're gone. They're not an asset. You can't depreciate them. Capital expenses, on the other hand, are hard assets that are going to be around. You do want to depreciate them. As you're depreciating them, you're holding on to value for your company. They're important when you're borrowing money and to show that your company has a net worth. It goes really deep past depreciation. There's amortization and depletion comes into play here. That's when you're financing some of this stuff. Even the money you spend financing can be a tax deduction for you. So it gets to be important. But this is CPA stuff. When you move into depreciation, you're moving into CPA accounting issues, not Steve-O's little calculator here. We're talking about someone that knows exactly what they're doing, and most importantly, that are up to date with the current laws. These things change yearly, and therefore that's where the CPAs and the capable bookkeepers have to stay in touch and stay up to date. So let's buy a $250 printer like my beautiful little HP right here. And I depreciated this. It'll last me for 10 years. I depreciated it, and on my books is showing that it's raised the value of my company $100 probably. But if I was a large insurance company with 500 agents out in the field and every one of them needed that computer, I would not be depreciating that little computer. I'd write it off. Point being, every company owner gets to decide how they're going to depreciate their stuff. So that's it, and that's where tax avoidance plays in. Sometimes you'll do it one way, sometimes another. But let's say I was buying a new $2,500 or $5,000 commercial printer. Most everyone would call that an asset and depreciate it. When you depreciate something, you need to keep up with the serial number, the date it was purchased, and the exact amount you paid for it. And it's not a bad idea to write down the check number if you paid with check. because it's going to stay on your books till it loses all its value or you decide to take it off. So you got a historical record there. Now, when I bought my new printer, I went in and bought a case of printer paper. Well, we will not be depreciating printer paper. No, it's a used up item. It's going to be gone. It's a write-off. Payroll, write-off. CPA expenses, write-off. A new set of shop tools, $4,000. Well, let's talk about that in a minute. That's around, that's tangible. And these little tools that are maybe $50 a piece, they add up to a lot of money. I got a toolbox back here worth $30,000 full of little stuff. So very few people are going to buy a $4,000 new set of tools unless they have a special situation. But a lot of us are going to buy a $30 one here, $50, $60, $100 there, and all through the year, we may accumulate tools in the value of $4,000 that are still here in our toolbox. So what I suggest that we do is group those together and call them a $4,000 set of tools and have your receipts to prove that you bought them. That way you can depreciate items, whether you bought it all at one time or you have a collection of items that you can have at one place and take the advantage of it. That's an edge that I've used through the years. Let's say we're renting a forklift for 24 months for $1,000 a month. Well, that's a lot of money. That's $24,000, but it's rent, and rent is a write-off. But I have a purchase option. I can buy this forklift after 24 months for $5,000. So I've got $25,000 in that forklift, right? Wrong. You don't have $25,000 in it. You got $24,000 times $1,000 a month. Use, not ownership, but use. You got a $5,000 check creating ownership. So that forklift that's probably worth $20,000 is going to go onto your books with a book value of $5,000. The book value is $5,000. Nailing this down now. The book value is $5,000. However, the fair market value may be $20,000. Same forklift, same history, but a whole lot of difference in the values comparing book value and fair market. This is a huge, important thing for each of you to remember. You always want to think about what is the book value of something worth versus the fair market value. Because you may be looking at buying a company or the assets of it or going to a sale and doing this or that. And when you're thinking about purchasing something, this gets into doing your homework, your preparation. Always prepare knowing what the fair market value is. Because as entrepreneurs, we want to always purchase below fair market value, so we'll be in position to sell above fair market value. If we get that upside down, we're going to be in trouble. So we have to be aware of that. Taxes. Well, probably all of us now filed our taxes. That time of year is past. And you want to remember that several things are important. If you haven't found a CPA or a bookkeeper that's going to help you with your business, go ahead and get busy doing that. I encourage you to try to find an experienced bookkeeper that is familiar with your type of business. It will really help save a lot of issues if they have some historical knowledge about the problems that your type of business may have bookkeeping-wise, and they have solved some of those problems for other people through the years. So think about that with your bookkeeper. Your accountant, if it's a different person, same thing applies. Accountants a little bit different because they have to be well-trained and well-schooled before they become CPAs. You know, they've got to know their stuff, and they operate as an officer of the court almost because of the oaths that they take. But your bookkeepers, that's a special little group of ladies and men. You want to try to find some experience there if you can. Be really, really important. Tax evasion, tax avoidance. Avoidance is a good thing. I'm telling you that you need to know how to avoid paying taxes, because if you don't, you'll pay a lot of taxes you shouldn't have. But you don't need to get over in that column called tax evasion, where you're lying and stealing and misrepresenting and taking advantage of situations that are illegal. Those don't take long to get caught at, and by golly, you just need to be careful there and try to stay on the right lane. Do all the avoidance you can, but to do it legal. Remember that your CPA, when they're doing your year-end reports, they are indeed, and or your bookkeepers, they are indeed going to have to ask you the questions to get the information they need. You don't need to give them any extra information. Just answer the questions, give them what they need. And indeed, save you a lot of money. The accountants and the bookkeepers charge you based on how much work they do for you. And that work is based on how much information you give to them. In today's world, internet and services available, most every professional that's serving businesses have a bookkeeping software related to your particular style of business that's really refined now and very sophisticated. So these issues are not quite as difficult as they used to be when everybody was doing everything with books that they read, or didn't have the availability of instant information with AI and the internet. I'll share with you that as far as AI is related, I have been using AI as a referral. Instead of calling my bookkeeper or my accountant and asking them pretty much what I thought was a simple question, I'd ask AI. And generally, their answers are very thorough and give you several options. And you can take that information and then ask your bookkeeper or accountant the same question and see how they answer it. And pretty good exercise of getting the information that you need. Tax avoidance, good. Tax evasion, not good. What are the deductions that will go a long way in helping you get started? Home office deductions are always the first question that most of my classmates ask, and that is the deduction you take. If you're running your business out of your home, then you are eligible for a home office deduction. If you've got an outside building that you're renting to your company, indeed, you can just deduct that rent, no matter what you're charging, and that keeps it real simple. But if you don't have an outside building or a separate office, then you're going to say, I have an office in my house, and you determine how much deduction you can take by how much space you claim that you're using as your office. And that would be the percentage of your total home. Now keep this real simple. Let's say you have an apartment, 1,000 square foot apartment, and you're saying that your office space there is 10 feet by 10 feet. Therefore, that's 100 square feet, or 10% of your home space. That would mean that you would be able to deduct 10% of your total home expenses: rent, mortgage, roof repairs, painting, janitorial, supplies, all those things. You would have those up, take 10%, go over to your business column and take a home office deduction of that amount of money. Don't get real generous with yourself and saying that my office is 90% of my house. You know, you can get crazy with that. And an auditor would really love to have a deep conversation with you about that if you wanted to put that out there. Travel, meals, entertainment, big deal for a lot of us. The key now is it used to be kind of willy-nilly, easy to go. You can put down about anything, get by with it, but that's not the case today. Anything that you're going to use with a deduction as far as travel, meals, entertainment, and gifts for your customers need to be documented. When, where, who, why, how much, and a receipt. Now, I've been told by lots of folks that you can download apps for your cell phones and for your computers to help entrepreneurs keep up with their daily logs of expenses and travel. A very inexpensive way of doing it and very thorough. I've never used those. I hadn't had a need for it in my generational time. But I think if I was starting business today and doing the traveling that I used to, I definitely have that app and use that to help me keep up with expenses. If you can document it, you can probably deduct it. That's kind of the rule of thumb I'd like to say. Using your personal vehicle for your business expense. A lot of us do that, even if it's just going to the post office every day. We're using our vehicle to go to the post office, and so much more. Because we're using our vehicle to go to the post office, and we just happen to go by our children's 5 different schools, playing taxi service back and forth to the post office. Well, I wouldn't put that in my report. I just say I was going to the post office, and you took the scenic route. How about that? But you can be reimbursed for the miles that you put on your personal car. And let's say that reimbursement was 80 cents per mile. And it's pretty good now. And this year it will be even more with gas prices going up. Let's see here. I've just lost my screen. Let me see what I've got to do. Okay, I'm back. You can, let's say that you 80 cents a mile is the reimbursement, and you drive your car 100 miles, then the company should pay you back $80. Just that simple. So you keep up with your mileage. But you pay the expenses, you pay the gas, you pay the insurance, you do the repairs, you do all that from your personal pocket. Some companies indeed have so much mileage and so much travel or so many employees, it behooves them for the company to own the vehicle, and or the company to lease the vehicle, which is lots of times a real good option. Because remember, lease payments, like rental payments, are 100% deductible. No questions asked. And some of these rental companies and lease companies offer plans that you can use their cars and pay the lease for a whole lot less than you can own it. There's no doubt, so you need to give that some consideration for a direct write-off. Any interest that you're paying, direct write-off. Rentals, taxes that you pay, deductions. Insurances, business insurance or deductions. Now, I usually like to take a minute here to talk to you as individuals. As young people with young families are going into big debt to get your businesses started, got a lot on you, not a lot of pressure. And if you would pass away, someone would have some debts that have to be paid. Someone's going to inherit your debts. Or you might have children that's going to need someone to help them get an education or have security. And you can use your business funds on your personal life insurance to pay those premiums. And if you buy whole life premiums or universal life premiums, then you'll need to talk to your insurance professional here. But there's a good chance you can start creating really good cash values on your insurance policies while the company is paying for those premiums. You with me so far? Now, that gives you the option that when you pass away, those benefits can be going to help pay off those company debts, maybe. Or 49% of those benefits could go to whoever you want to send them to. Even though the company has paid 100% of the premium, maybe the company doesn't get but 50% of the benefits. You see how that can be worked around a lot of different ways. These laws change, and this is something you definitely want to talk with a professional insurance provider to make sure you're not going down the wrong road here. But in my day, in my generations, when I was coming along 40 years ago, 50 years ago, it was a big deal. I was able to create a savings account for myself, for my children, and have the security to know that if I'd pass away or become disabled, I could pay off the debts of the company and not leave that pressure on someone else. So you're setting your own legacy as we're starting off now. Give some thought to what will happen if you're not here. What's going to happen, security-wise and such as that. And if your company can pay those premiums and you get the benefit of them now, and maybe later on changing ownership over to yourself to get advantage of those cash values, that's a good deal. That's a good deal worth thinking about. Again, these things change, so make sure you qualify it with up-to-date information. Your training cost and your education, itemize it, deduct it. Clothing and uniforms. Some companies have lots of employees wearing uniforms. My mechanics and shop people and sales staff, I provided uniforms for them for 60 years. I always had a large uniform bill each week, and always deductible. So I said to myself, well, how about those that are not in a formal uniform, but just wearing regular clothes or dress clothes? I needed to give them and myself a little bit of benefit of that too. So I started providing dress clothes and such as that for those people that didn't wear a regular company uniform. I never had a problem with that. Still do it, and I suggest that you do it too. It's a good way to get a good deduction, because those of you that need to travel and dress appropriately, you need to dress to impress. There are times that's really important about making that indelible first impression. Okay, and indeed you need to buy the clothes to make your company look good, and your company should pay that price for you. It should be a deduction for you. The way I do it is 2 or 3 times a year I will go buy clothes, and I'll get so I'll have a receipt with $200 or $300, $400 on one receipt, and I can write that receipt down as a write-off. Okay, it's worked for me. I think it will to you, as long as you don't get greedy or go overboard with it. All right. Tax preparers and collectors, remember, do all the summarizing you can on your paperwork before you give it to the bookkeeper and or the accountant. If you can give them summaries about the different accounts, the different chart of accounts, remember we talked about, you summarize the totals and give that to them, and then they don't have to do it. If they do it, they're going to charge you for their time, and they should. If you do it, you don't have to spend the time to do it. And maybe you don't have that time and you'd rather pay them. But indeed, this is just putting paperwork together and running through it with an ad machine a while. What I have to do is set aside 1 weekend a year to get ready to go to the bookkeeper and do all that paperwork and ad machine work, and I can get it done in 1 weekend. But I feel like it saves me several $1,000s, so I'm glad to do that. And plan to give that some thought. But if you're in the habit of just putting everything in a big brown paper bag and handing it to them and say, here it is, then get ready to pay the price. What you lose in that process is the personal knowledge, the savvy of knowing where your money has gone. That process of summarizing things gives you a real eye-opener, looking at a whole year's worth of business laid out in front of you. Maybe you see some places that you can cut some expenses and do some things different. Who takes our money? At the city, it's the town clerk, county tax collector, the state of North Carolina DOR, Department of Revenue, and the U.S. government, the IRS, or the Treasury Department. They may call it fees or estimates or permits or license, but indeed it's taxes when you go for it. In your handout are the contact places for each of these organizations and who to be in touch with. I will say, if you're really anxious about doing business with the North Carolina Department of Revenue, after all the things I've said about how they collect taxes and may shut you down and all like that, just get over it. Because they're just doing what we pay them to do. And in North Carolina, entrepreneurs are treated really well by the North Carolina DOR and the Secretary of State's office. They have divisions and people trained to help you. And they're looking forward to working with you, and indeed, they listen well and give you good information. Another piece of information, your local small business centers have direct contact with the DOR people in your region. So if you have a particular question or want to meet one of them face-to-face or get some information from them, your SBC director can probably have a first name basis with these people and set up a meeting for you or invite them to come in. And they actually come to the small business centers often and put on webinars and seminars. So it's a good relationship here. We are very fortunate in North Carolina that has a Secretary of State's office and a Department of Revenue that are really geared towards helping entrepreneurs, and I'm very thankful for them. Unofficial questions and answers. When it comes to taxes, a lot of you are in the business of setting up pop-ups or setting your new business up somewhere street fairs and doing some business on the street or in the gymnasium or at a special event. And tax questions always come up. So I asked my bookkeeper to do some research and give us some information. Your study guides go into this deeply and answer the questions I'm going to be talking about in depth. But I wanted to let you know what's in there. When you go to a craft fair, are you required to collect North Carolina taxes? And the answer is yes. Just because you're doing this as a hobby or a side hustle or something like that, does that mean you don't have to collect taxes? No, you're supposed to. Does everybody do it? Well, probably the answer is not yes. Okay, but it's my obligation to tell you you're supposed to. You're supposed to collect the tax and you're supposed to send it to the county. Now, while you're out there, should you be collecting tax at that particular county's rate or at your county rate where your business is? And the answer is the rate of the county that you're operating in. So you need to know that. Who's going to be able to answer that for you? Whoever set up the fair, whoever you paid the rent to. Okay, you ask them the question. So let's say that you're collecting money for items that you're shipping out of state. And are you required to collect North Carolina sales tax on items that are being shipped out of state? Most of the time the answer is no. But you've got to prove that it's shipped out of state. That's why you want to keep up with your shipping records, okay? Because if you're audited and they see that sale that you didn't pay tax on, they're going to say, why not? And if you can't prove why not, then you don't have to pay the tax whether you collected it or not. So you keep that in mind. These page numbers that I'm referring to are in the guide that I'm sending to you with your study guides. Now let's say that you are shipping items to other states, and are you required to collect money for the other state? Well, you know, if you're buying on Amazon, lots of times you'll see that they collect tax money for other states, some of them. Kind of the rule of thumb here is, and it's unofficial as it can be, please hear this, this is unofficial because it changes and different circumstances may apply. But generally, a small business person selling under $100,000 worth a year in a particular state generally is not collecting tax for them and sending taxes to them. That $100,000 a year in each state is an important factor. Some states have it, some states don't. The research that I did on a lot of states, it applied. You do, however, want to talk to your CPA and or your bookkeeper about this issue, because if you've got a good started business with a good volume approaching anywhere close to $100,000 a year in a particular state, you really do want to know the answer to this question, because you don't want to come back. Remember, this 7-year keeping up with your records, that's generally the statute of limitations on these things, and they may be able to go back and hurt you badly. But that $100,000 a year in any one particular state besides North Carolina, if you're here, you don't definitely do your taxes right in North Carolina. That's a high threshold that very few of us will reach, but some of you will. So keep that in mind. Unofficial answers: is there a place that you can get lots of information? The North Carolina Department of Revenue has a website that will load you up with all the information you can ever imagine, such as that. Okay, Steve, I've got a little business and I'm going to fairs and I'm collecting $10 worth of tax here and $15 there, a very little amount of money, so I'm off the hook, right? Not according to the rules. They want you to keep up with every tax dollar you collect, and even if you file monthly or quarterly, they want that tax money to be sent into the state. So that's what the law says. Again, you can go to the guides and get good information at ncdor.gov. How often do we hear that? If you want more information, go to the website, right? What are the main different types of taxes? Withholding, privilege, unemployment, franchise tax. The franchise tax doesn't mean you have a franchise. It means you're doing business and you need to pay the price. I did my taxes earlier. I didn't have to pay any income tax, but I had to pay a $500 franchise tax to the state of North Carolina, basically for the privilege to do business here. So always look forward to it. maybe you've used good tax avoidance methods not to have to pay income tax, but they're still going to get you for a franchise tax, state and federal. So look forward to that. County taxes are not interested in your income. They are interested in the items you depreciated. They are interested in what you own. How about that? Yeah. So the state and the feds get you for income, but the county's going to get you for ownership. And you need to know that. That's why as you're adding these items to your depreciation list, you are keeping items that you're going to need to keep records on and pay taxes to the county. So usually the county taxes are quite reasonable unless you own real estate, such as that. Most everybody will agree that real estate taxes can get unreasonable in a hurry, but that's a matter of opinion with the appraisers, right? I can't speak to that, but I can tell you you will need to be keeping up with it. And whatever you put on that depreciation list, you definitely want to be able to go put your finger on it and prove that it's a real thing and it's here. Because the depreciation list has the total book value of your company. And when it's time to start selling your company, or if you're buying someone else's company, you want to have a good understanding about what made that work. Later on in the year, I'll be giving a whole series on succession of a business, and part of that will be how to buy and to sell another small business. So we'll get into that there. Audits, none of us want to give up the time for the auditor. We want them to go see somebody else and not us, and we want to stay off their screen. Good news is less than 1% of returns are audited. Some of them are done by random, so my chance and your chance are as good as anybody else's in the state or the nation. It may come up. But the rest of them are audited because of red flags. There are reasons that people's numbers come up. And those reasons are kind of important for startup businesses, and I want to talk about that. If you're in the habit of using a shady, brand new, out of this country tax preparation person that you're doing business with them because they had a sign out on the corner that said, "Let me do your taxes and I'll guarantee you a $3,000 refund," and those signs are out there, then you want to be careful with that because they can't guarantee you a refund unless they're going to do something shady. That just doesn't work, and you just need to drive on by. It's just no good. Find someone that's reputable, and there's plenty of reputable people. David, that was with us from over in Madison for a number of months, he does tax prep. And we've had several other people on board with us this semester that do that, and they have accreditation forms. They have historical and references to provide to you. Make sure you're getting good references on whoever's doing your taxes, because these people, some of them are crooks, and they will take your return, set it up for a great big refund, and when you sign the papers and the documents, the fine print says they're going to get a big piece of that refund, and by golly, they're going to be gone, and you're going to be left holding the bucket when the auditor comes by. So stay straight with them. Stay away from shady preparers. Unreported income works for a little bit, but it won't work forever. Just get in the habit of reporting your income, paying the taxes on it, and then being smart with your tax avoidance so you can reduce that income as best you can by the way you manage your books. But report your income. Showing that you're having a good income goes a long way to justify lenders talking to you, new vendors, people setting up your credit lines or giving you opportunities. Unreported income is a good way to get in trouble in a hurry. The tax folks know the different businesses. They've been watching businesses for years. And if you're bringing in X amount of money into your bank accounts and you're showing that you're paying taxes on a whole lot less than that, that's what you call something that raises the flag. Just be aware of that. They're not dummies, and they have computers that know how to sort it out. So we're ending the session now. What do we need to do at the end of this course? We don't want to say take it or leave it to our customers. We want raving fan customers, and we think about them every time we make a sale. We know that our database is how we're going to stay in touch with our people with fresh, good bait so that we can have new business all the time, all year long, and we have to keep that information going out to our customers. We have learned that our mobile page, our mobile web page is the way that 80 to 90% of the people are going to find us. And that mobile page needs to be designed and refined to help capture customers. We want a My Business at Google account because it's low cost and it's real powerful to bring customers to you. Our web pages are all important, but that mobile page is most important, and then the selling pages, the landing pages are critical. Those are pages that are full of salesmanship and closing deals and motivations, web pages that just scream out at the customers, come on, let's do business right now. Be that assertive person. Learn to motivate through your web pages. Learn to motivate through your videos, which is the easiest way to motivate folks. Get testimonials, add those videos time and time again. Remember, when you're being the best person you can be, you're going to be the best business person you can be, and people recognize it right off the bat. What is the magic marketing moment? That is your knowledge that I need to ask and talk with my customers about what are you going to do next? Do you know someone else that might need my services? Can you share with me any prospects that I might use for the future? And you're going to be savvy enough to write that information down on those little tickets and charts and papers we talked about and go back to your office and put that information into your business plan, into your marketing plan. That's the magic marketing moment that teaches us what's next. We'll move through this. It may take me a little longer than 5 minutes to do it, but stay with me, okay? You guys, some of you are very professional. I feel honored to have you on board. Been in business a long time. However, a few of you are just getting started, so this will be important for you. But I'm not going to mess around with freshman talk and sophomore basics. Not going to spend a lot of time with the ABCs, but I am going to talk about the refined area, and I'll call it 404. In other words, you're in the senior class when you get here. It's time to go to work, time to make things happen. Selling, closing deals. The real estate business has for many, many years saying their number one theme is always be closing. Always think about closing the deal. Look for that closing opportunity. And that is very true in all types of business work. The owners of the business, the professional salespeople, will indeed get 90% of the sales, and everyone else will get the 10% that's left. The professionals, the well-prepared, the people with the right game plans will do better than the other 90%. The fundamental foundation on doing business is trust, and those people need to trust you. This is where charisma is really important, maybe get their attention, but character and truthfulness builds trust. There are some things that even the most cool professionals forget, and always the most inexperienced people are apt to do. And I want to talk about a few of those. Is it okay to take a telephone call when you're talking with a customer? I mean, these sales phones ring all the time, right? And maybe we're in the middle of the close and our customer gets a phone call and they say, I need to take this. And we just smile and say, okay, but we're really thinking, daggone it, I hate that happened. So don't you let it happen. Leave your cell phone in the car. There's nothing more important than you in keeping concentrating and being prepared when you're talking business with your customer. Just remember that. Don't let the cell phone call keep you from getting a deal or distracting you. It's just not a good thing. Is it okay to wear really strong cologne or perfume, or to have smoke smell on your clothing or your body, or be spitting tobacco, or having a dog with you when you're in the presence of a customer? No. I used to have a couple of customers that come into my office, and when I saw them coming, I would get up and say, let's go outside and talk. I mean, and I could take a strong smell back then. I was a big smoker at that point in time, but they make me sick with the odors. And indeed, my wife tells me I put on too much Aquavella sometimes. You know, I love Aquavella. I can't smell it. Generation thing, right? Okay. But, you know, Aquavella is a good thing for me. And I'll splash it on. It's a good thing. It smells good to me. I don't understand why other people don't love it. But she says I need to back off. So I'll take the towel and wash it off, you know, things like that. So I learned my own lesson. How about those dogs? How about these care dogs? They're so important to people and such. And some of them smell like wet dogs. And other people don't want them in their office. Maybe you should have left them in the car, you know, left the window down, of course. We don't want to get in trouble. People nowadays, in 2026, have allergies, big time. Cats, dogs, tobacco smoke. Oh, tobacco. You know, I smoked as much as a man can smoke from 20 years old to 40 years old, and then I quit. Thank God I could quit. Because now I smell smoke on you. If you're a smoker, I smell it the minute you come within 10 feet of me. And it stinks. My friend, please don't get mad at me, but if you're a smoker, you stink. You can't help it. I'm sorry. Ladies that think you're so cool because you go outside and blow up in the air. So you stink. It gets in your hair. People can smell it. And some people abhor that. Why do you want to take a chance on turning somebody off when you're doing your best to create a raving fan? You know, please take this seriously. It's important. And as you're looking at your children and young folks that are developing these habits that are going to affect their business forever, whether it's smoking or, I'll mention this, tattoos. You know, some of us love them, but it really turns a lot of people off. So when you're looking at your long-term business thing, I don't care if some of the most expensive paid actors on TV are covered with tattoos. I'll tell you, there's a large population out here of the generation thing that's going to turn them off. See, I'm not judging. I'm just trying to share the ramifications of different habits that we have. Take it into consideration. It's a big deal. Political views, red hats, yeah, no kings, you know, all these slogans and labels that one side's putting on the other side. People getting mad, people wanting to shoot somebody, people hate. Man, I don't need that with my customers. They don't need to know my personal feelings on every politicians that I like and dislike. They may be trying to tell me about theirs, and I just listen to them and nod my head, but I don't lean one way or the other. Because the person over on the other side of the room who may be the decision maker may feel totally different. So why get into that? Yes, be a patriot. Love and support your flag and your veterans and your service people. But you don't have to let the politics drag your business down. That's right. Keep that in mind. Is it okay for you to walk into an office when someone's taking a personal call on the telephone? Is it okay for you to interject yourself into their environment where you hear their side of the conversation? It is not. Even if they're waving you to come on in, don't do it. Just say, oh, wait a minute. Okay? They may keep waving you to come on in and want you to, but you don't do it. You having the nerve not to do it is a plus in your favor, and after they think about it a few seconds, they will realize that you're trying to honor their privacy. So do that. I used to hate it when people, I had an open door policy in my office, and sometimes I'd be on the phone, and I could have gotten up and closed the door, but excuse me, but I never did. And people would come in and park their butts right in the seat right beside me when I was trying to do a business call. And I'd have to say sometimes, please excuse me, this needs to be private. And I guess that was my fault for having an open door policy, but I learned the reason I've got this up here now, I should have stood outside. The customer should have stood outside and waited for me to get off the phone. And that's what I want you to do. That's what I do now. Never think you've got the deal when you don't have the deal. Just because someone's being nice to you and saying, I'm going to give this consideration and we'll see what we can do, in the next 5 minutes they give the business to someone else. Folks are going to be nice to you. They don't want to give you bad news. You work until you get the deal. You call them up the next day or the next day. Or when Friday comes, you call them and say, Jennifer, I hadn't slept at all. You can white lie here, be okay. I haven't slept at all this week and is hoping that you could give me this order before the weekend. I want to tell you, I'll have a great weekend, and you will too if you'll go ahead and let's do some business. Be hungry. Don't be ashamed of being aggressive and after business. Be professional, but be hungry. People feed hungry animals. Okay? Be a hungry animal. Don't be ashamed of that. It's very good to show people that you really want their business and you're really looking forward to serving them and making them 100% satisfied. Don't think it's in the bag, because old cagey folks like me that's been around a long time, we live on taking business away from other people. And I want you to too, no doubt. Urgency is important. It's a fast-moving world now. People get in the mood to do something, they want to do it. I've got things that people need, and I got things that people want, and all of them want it now. And you want to be there now. Don't put off answering emails. Don't put off returning phone calls, even on weekends. Don't put off getting back in touch with that customer. It may be the difference in getting the deal and not getting the deal, or answering that important question. Be on top of your business. Answer email, answer text messages. Wrapping up now. Never give away information you don't have to give away. You've worked hard to put your proposal together. It's yours. It's private. Tell them what they need to know, but don't tell them any more than they need to know. Don't itemize your quotations to give them ideas of who your suppliers are or where you're coming from or the different ways you figured up your bill. Justin, you don't want to show someone a quotation where you've plugged in $90 for transportation costs, because that customer may look at it and say, well, you know, if I was dealing with someone closer to me, I could save $90. Just don't give them a reason to start looking for other bills. You want your quotation to be offer 100% satisfaction and total. Each time you're making a proposal, Hope and Leslie, and each time that you're making a proposal, Veronica, it's important that it be a pitch. It be, I'm excited about offering you this. It's going to be good for you, and it's going to be good for me. And at the end of the day, my goal and your goal is to be 100% satisfied with what we're doing. You going into the proposition feeling like, and letting them know you feel like, hey, I'm going to get this deal. I am bringing a good package here, and I'm sure we're going to do business. That assurance that you're showing and projecting is transparent and indeed contagious. People will see that you're excited about it and looking forward to let's get on together, and it just brings them on board a whole lot faster than if you're going into it, well, I hope I can get this deal. I know I've got tough competition, and you talk about this, and you talk about reasons why people might not give you the business. You're giving them a reason to think about that. So think positive as you're talking to your customers. Again, don't tell them your vendors, your subcontractors, and your manufacturers. In the days of the internet, they'll write it down and they'll go right straight that other website and do business with these people one-on-one. Now, wrapping this up, you can be as good as you can be, have everything done just right. Pricing, products, presentation, marketing, websites, back and forth, returned all the phone calls. Now it's time to do the deal. And we run into a brand new set of circumstances that only experienced people know exist. So some people can't say yes. Some people hate that final nudge to say, okay, I've saved up my money, I'm ready to spend it now. Because they work so hard to save up the money or to get into position to buy something. But now they're thinking about how sweet this is to have this security with a little extra revenue or not that extra responsibility. Maybe I really don't want to make this move. I thought I did. It seemed like a good idea at the time, but now I'm having reservations. And they were literally balled up into a ball of nerves and anxiety, and you can't close them. Lots of times. And these are the big deals. These are usually the big deals. Some people don't want to do the business so bad at the last minute, they'd actually cry inside to keep from closing this deal, and especially if they got someone else on one side or the other that's encouraging them not to. You know, that can get really tough. And each one of you, from time to time, will be facing this. So how do we deal with this, Papa Steve? How have you dealt with it through the years? And I have, so many times. Number one, preparation. Have your preparation as a work of art. It is an art form to prepare yourself for a closing. That is, you've got your paperwork ready to the point that it looks good, it's typed, all the questions that you can think of are answered. You know what your bargaining range is, and you got that line there, that blank line or a figure written on that blank line that you're ready to close out. So that when you get to the point, all someone has to do is just initial it or sign it or whatever. You've done the thinking for them. You've left out all the unknown conversations, and you've thought about your bargaining ranges as we talked about in negotiating. So very important to have your stuff together. The old gentleman, my good friend, Dr. F.A. Mesmer, and I don't know what F.A. stands for, but I can tell you this, he brought into this world a brand new word for us back in 1800s, and that word was mesmerize, named for Dr. Mesmer. Now, mesmerizing, I know about it, and I first learned about it best from my grandson, Colin, who spent lots and lots of time with us. And little Colin would sit in front of the TV, and he was watching SpongeBob SquarePants if he was watching TV. And SpongeBob SquarePants captivated our home for years. And Colin would sit there, and no matter what else was going on in the whole world, he was focused on SpongeBob and all his little characters. He knew every word they were going to say before and after they said it, and he was talking right with them, and he knew what was happening with SpongeBob SquarePants. He was mesmerized. Have y'all had that situation? You know what I'm talking about? Have you ever been mesmerized? I bet you have. I bet you have. Because mesmerized takes in entranced and captivated or hypnotized or transfixed or fascinated. There's a lot of room here in mesmerizing. But old Steve-O learned how to apply this to selling. Because those people that have a hard time saying yes or moving off the block, getting them to go ahead and take that next step into closing a deal, the way that you move them forward, the way that a professional person moves them forward is through mesmeration. And it doesn't take but 2 or 3 seconds of it to work. It's building yourself with the business skill of saying, this is like a drama. Closing a deal is like a drama. The stage is set. The props are in place. The right music is here. The right sounds are here. The right gestures are being used. It's all this stuff comes together to mesmerize your customer. Can you do this? Oh, yeah. Let me tell you, old ugly Steve-O can do it. I know you can, no doubt, because it just takes a little practice in knowing what your goals are. So listen to me and let's work through here. What you're after is the aha moment. The salesperson, the person closing the deal, is looking for that aha moment. That aha moment is when the customer gives you the signals that they are ready to buy. And when you get those signals, it's time to stop selling and start closing. So many inexperienced entrepreneurs just keep on selling. They think if they keep on talking, keep on selling, the customer will eventually say, okay, I'll take it just to shut you up. But that's not reality. What they're doing is they get tired of listening, they lose their interest, and they head out the door. But the professional salesperson, like you're going to be, like you are, Justin, Christina, Serena, Edna, What y'all going to do is to learn to recognize those buying signals and close the deals. But you still got to be pretty cool when you're doing this. So that aha moment, what is that? Those of us that have had children, grandchildren, people we've looked after know that with babies, especially young babies, they can cry all night. And they can cry at the top of their voice, and they can wear your hips out. They can wear your shoulders out. They can wear out your rocking chairs. They can wear out your Buick if you take them for a ride or your golf cart. I mean, they just not going to quit hollering until at some point in time, they're going to look up at you with that three-pointed smile babies have. Take that deep breath and exhale. Aha, that is the aha moment. And you see that with customers too when you're a professional salesperson. You're looking for it all the time. We're always closing, right? We're always looking for that aha moment. And some customers come into your office ready to buy. And you don't have to do all that selling. Other people, you have to use the whole game plan to make it work. But what do you do at this aha moment? First of all, what are the ingredients? They have to like it. You've got to win their trust. They have to know that there's a need here, or they really want it, and you're prepared to deliver it. You're just not talking about it. You might be able to do this, or you might be able to do that. You've convinced them that you're ready to do business. My daddy taught me to tell customers when I was ready to do business to look at the customer in the eye and say, now look here, I put on my trading pants today and I'm ready to do business. Trading pants, and that's something to say. And customers will look at me and they can identify with that. That's old Sampson County country talk. We know what that is. So I put on my trading pants and do business. But they got to know that the price is right, the value is good, and sometimes you might have to remind them of that. You might remind them as you're talking to them, you lower your voice, you look them in the eye, you start using gestures, and your gestures start in a positive, yes, hand nodding situation to a saying yes. Follow me? And just like Veronica just moved her head up and down, not even knowing it, she was following my lead. And your customers will do that as well. Make them comfortable with you and with the product. And you have to talk softly and look them in the eye and be as sincere and trustworthy looking as you possibly can become to win that trust and move them forward. You talk about all the things that are good. And what we're doing, we're trying to get them to get rid of those anxieties. Now, they gave you the little aha moment. As you're doing this, you will see that you're getting there. Those anxieties are going to be gone. And they will when they exhale. And you'll see them actually drop their shoulders and relax. They will give you the sign that they're breathing easier, and you are in the middle of the aha moment. And now it's time to sell it. So how do you do that? First of all, you're not waiting for them to say, yes, I'll take it. Remember this. You simply say, remember you were shaking your head and doing your hands. You simply extend the hand. Let's shake on it. Or extend the hand and say, let me initial right here by this number that you've written down that y'all have agreed on. How about just initialing right there? We'll close this deal. Don't make them say, yes, I'll take it, because some people will not do it. Some people sitting beside all of them will not let them say it. If you're dealing with a couple or a situation. But if you get that initial down there or that handshake to move it forward, my friend, you have made a deal. And they never had to say yes, and they were mesmerized, and they felt like, man, I have done a good job here. Now, you've got an obligation to do here. Maybe as important as the whole thing we said heretofore. What you want to do is to make sure that you congratulate that customer on being a great negotiator and being a pleasure to do business with. Congratulate them and say that they're a pleasure to do business with. You're planting Raving Fan customer seats right now because you want them to know that this was a pleasurable moment, a good moment, one they're happy about, one they had anxieties about before. But now I feel good about this. Because the next person they talk to, or the next a week from now, or 2 weeks from now, or a year from now, their word is, I sure had a good experience doing business with them. And remember that raving fan customer recommendation? That's where it pays dividends. One, you got a good customer. Two, you've got a customer that's referring to you. And a little footnote here, maybe you didn't get the deal, but it was still a good experience, and they come back to you, or they still recommend you. Take this very seriously. Use this not only in doing business negotiations, but negotiations with your family, with friends, different ways that you're trying to win a moment or an argument. It applies to everything. Mesmerizing is a powerful personal business tool that you can own and use. No doubt about it. So it doesn't matter how many times we get knocked down, how many times people tell us no. What really counts is how many times we get back up, because we're determined to win this race of entrepreneurship. And it's going to take a while, and it's not going to be easy. The way we win this race is to stay in it. Just like our friend Mr. Longfellow, the three-legged dog that won the big race. Odds were against him, but he stayed in the race and he won the race. Our values will make the difference: respecting every person, maintaining high standards, as we see it, earning trust, putting good partnerships together with you, our classmates, and other people. Embrace excellence. Don't settle for mediocrity. And maybe always remember to be still and know that we're not in this alone. We have our Creator and our Jesus that's always willing to help us, and we talk to Him. We have friends and counselors. We don't have to be in this alone. Find time to meditate, charge your batteries, and move forward. I want to thank you for the series. I look forward to seeing those of you who can come next Thursday night for the in-person. Those of you that cannot, we're looking forward to sending you some really beautiful certificates that Sarita is already working on. So many of you have been 100% attendance, and I really appreciate that so much. It's so gratifying to work with all of you. I'd appreciate any comments that you might have to make, and we'll leave the recording on to give everybody a chance to share with you whatever your feelings are about the course and or tonight. Thank you very much. How about it, Sarita? Can you start us off?
Hey, everybody. I hope to see everybody next week. It was a great class. It's even better when you're in person, you get to see everybody. So I'm looking forward to whoever's coming out next Thursday to get your certificate.
Thank you very much. And Bart, would you have any comments?
Oh, I just appreciate everybody coming and hope they got what they needed out of the series. And like Sarita said, I'm looking forward to seeing everybody next week.
Very good. All right. Any other comments?
Thank you so much, Steve. I am just so honored to be a part of the series and the class, and to be around such awesome business owners and learning and growing with you guys has been wonderful. I hope that everybody can make it Thursday. I'll be there. Can't wait to see everybody, and thanks.
Thank you. I think we've all appreciate the fact that this has been a special class. It's done an extra amount of sharing, and it's been a pleasure to work with you as a family. So thank you so much. All right, like to say on the Waltons, good night, John Boy.
Well, I'd just like to say thank you.
Good night, everybody.
Hey,
Hey, Steve. You know, I'm always loving. I'm so honored to meet you. But someplace I never thought I would.
how about that? It is a special time, no doubt, and thank you so much.
You're welcome.
All right, well, good night. We'll catch you next time. Next Thursday night? Okay.